Okay, good morning, everyone. Welcome to Climate Governance Malaysia's Roundtable series for 2025. This is a collaborative platform that brings together policymakers, industry leaders, academics, and corporate players to crowdsource practical policy recommendations for Malaysia's climate transition. So CGM first held its Roundtable series in 2022, and it proved quite successful in moving the agenda forward. So this year they're running 19 sessions across 6 themes: biodiversity, agriculture, energy and resources transition, finance, built environment, and community engagement. So thank you to today's session partners, UNDP and the World Bank, and a special thanks to PwC Malaysia for capturing the outputs of these sessions. So today's topic is establishing a regional climate finance hub, unlocking blended finance for Southeast Asia's climate transition. It is curated and hosted by UNDP, the World Bank, UEM Agenda Berhad, and the Asia Investor Group on Climate Change. So today's session will explore the idea of a regional climate finance hub and the role that blended finance can play here. We'll also focus on the value of such a hub and finance for SMEs in particular, which make up a big portion of the economy and will obviously be key players in the climate transition. So my name is Martina Chow, and I will be the moderator for today's session. I am with the Asia Investors Group on Climate Change. We're the leading network of investors in Asia that focus on the risks and opportunities in climate and nature. We cover 11 markets across Asia and have over 80 members with a combined AUM of $36 trillion. We are a not-for-profit, so we were founded to really drive action on climate investments across Asia. So I specifically work on the just transition thematic, and I lead our policy engagements here in Malaysia. But our team leads working groups and engagements across the energy transition, nature and forests, physical risks and adaptation, Paris alignment, as well as corporate engagement through our Climate Action 100+ platform. So I'm joined today by an amazing panel of speakers. First, we have Chong Yin Wei, Head of Sustainable Finance and Innovation at UNDP. We also have Rebecca Chung Shu Wen, Financial Sector Specialist at the World Bank. And last but not least, Sharifa Bakar Ali, Head of ESG at UEM Agenda Berhad. So we have about an hour for this session, and we're going to keep to the time, but we have a lot to cover. So I asked our panelists to kind of keep our responses succinct and make sure we all have a chance to engage. And just reiterate that the goal of today is not just to have a discussion, but really to capture concrete and practical policy suggestions that can shape Malaysia's climate governance agenda. So a couple of housekeeping notes for the audience. The Q&A box is open throughout the session, so please feel free to drop your questions in there. We're going to reserve about 10 to 15 minutes at the end of the session to get to your questions, so please feel free to use that. At the end of the session, you'll also see that there is a Zoom survey that will pop up, so please share feedback on the series and the session through that, as that would be very helpful to the organizer. So before we start, I think it would just be helpful to sort of set the scene. Blended finance is the term we are hearing much more about, especially recently. And so for attendees who might not be familiar, blended finance can really be understood as efforts to pool public, private, and philanthropic capital together and use the public or concessional element to really reduce the risk or de-risk projects. The aim of blended finance is typically to attract private investment in areas or projects that maybe would not otherwise get the funding due to either high perceived risks or low perceived returns. So the aim is, in other words, to create what they call financial additionality. So some numbers that might be helpful, according to data from Convergence in 2024, we saw around $18 billion in blended finance, up from about 14.3 billion in 2022. And there has been an uptick in private sector commitments. In Southeast Asia specifically, blended climate finance reached a cumulative value of $24.5 billion to date. In fact, I think AIGCC has an interest in this topic. Some of our members have developed blended finance products themselves. And in my Just Transition Working Group, this is something we're following quite keenly. But obviously, blended finance doesn't come without its challenges around deal structures that are a bit complex, scalability, attracting local and domestic investors, bankability, liquidity. So before we get into the substance of this discussion, I want to spend some time with our panelists today to really set the scene and understand why we're seeing some of these trends emerge. So without further ado, I want to start with you, Rebecca, and maybe ask you just to tell us, what sets blended finance apart from existing forms of climate finance, and why do you think this is useful in the context of some of the existing trends that we're seeing?
First, thank you, Martina. A big thank you to the CGM team for inviting us here today. Koko and Agatha. I'm honored to represent the World Bank with very distinguished speakers. So Ms. Yuni from UNDP, Ms. Sharifah from UEM Agenda, and of course, Martina from AIGCC. So it's a very apt timing for us to talk about blended finance today. As Martina mentioned, we do see a lot of attention globally, and rightly so, because it has significant potential to scale up climate and nature finance. So as Martina really talked about, blended finance strategically combines public, private, and philanthropic capital to mitigate investment risks and unlock larger pools of private finance. So unlike traditional climate finance, which often heavily relies on public or concessional or philanthropic funding, blended finance is designed to catalyze market-based solutions and scale up capital impact. So in Southeast Asia, where climate risks are high, but private capital remains cautious, blended finance offers a pathway to breach the financing gap and accelerate climate-related investments. So all this sounds really technical, but what does it mean in pragmatic terms? Not all projects can generate returns in the short term to meet commercial investors' risk appetite. Blended finance can create an environment where private funds can be crowded in and help projects meet their funding needs. So a very simplified illustration I would provide is that imagine in your family, you have a brother who wants to start up his agri-type business in Malaysia. He needs 30,000 ringgit capital for his business. This is the bare minimum he requires for his business to take off. You, the older sibling, is willing to give a loan of 10,000 ringgit, but this is a loan, debt. It needs to be paid off in full, and of course, with interest. Your father, a bit more sympathetic, is happy to offer you 10,000 ringgit, but in return for equity. With this, your brother now has 20,000 ringgit of funding. But remember, he needed 30,000 ringgit. Otherwise, the business cannot take off. The final stakeholder then, your mother, wanting to help her son, steps in with 10,000 ringgit. In this example, this is the concessional capital. She treats it as a grant. She may or may not get her capital back. With this 10,000 ringgit, two things effectively happen. First, the agri-type business can now proceed, whereas otherwise, nobody was willing to put up the full 30,000 ringgit. Second, your mother's 10,000 ringgit of concessional capital has now crowded in additional 20,000 ringgit of funding, instead of limiting the project to 10,000 ringgit that she only can afford, bringing the total grant capital channel to 30,000 ringgit. So that's a very simplified way I would imagine talking to a layperson on how blended finance works. You use concessional or philanthropic capital to crowd in different types of investors in order to allow innovative solutions to happen. Thank you, Martina.
Thank you. I think that's a great way to frame it, and it also segues quite nicely into the question I have for Sharifah, because I think sometimes examples are quite a useful way to help folks understand what this is. So, we know that blending is in that sense not new, especially not new to the financial world. So Sharifah, maybe you can add on to what Rebecca said and share some helpful examples from traditional finance to show how this is something that maybe people are actually much more familiar with than they think.
Okay, thank you so much, Martina, for that question. And thank you also to CGM for inviting me to be part of this very, very distinguished panel comprising women. So that's a yay, right? So you're right, Martina, blending is not new. And I like the example that Rebecca gave just now, about how blended finance can be defined. Although, Rebecca, I'm a foodie, I would probably use the analogy of blending different type of food ingredient to come up with something very tasty. Ingredients on its own cannot provide you a tasty meal, right? But that's me being a foodie. Now, let me get back to me looking at blended finance from a perspective of traditional type of instrument. So blending is not new. It is because in the capital market, there are different types of capital providers who have got different investment goals. And also there are different type of projects on different level of development, right? So if we look at the traditional banking model, financial institutions typically will take money from savings and fixed deposit and channel this to economic activities for projects which are big and small to fund these projects. Returns made from these projects are then used to pay the interest on savings and FD. As projects became more and more risky, there was a need to use capital that can wait longer for returns to be seen, or even to tap into different type of investors to diversify sources of borrowings, right? Now, one of the earlier forms of innovation in capital market is securitization transaction. So essentially, securitization is the act of extracting cash from long-term assets. So in a securitization deal, cash flows from risky assets such as mortgages or SME loans are bought off using funds raised from a pool of capital providers. These portfolio of assets are then placed in a vehicle. Over time, the cash flow that's generated is then used to pay off the loan that was taken to purchase those cash flow, the assets. Now, securitization typically are used for very risky assets like mortgages or SME loans. There is a need to create a capital stack of different type of capital providers who can take different type of risks. Now, those type of capital providers who take the highest amount of risk will get a premium of return, whereas those who are guaranteed their repayment normally will get lesser return. Now, in my previous life, I had the privilege of structuring Malaysia's maiden residential mortgage-backed securitization transaction, as well as the country's synthetic SME loan deal. Now, in the first structure, we were able to extract cash to be given back to government of Malaysia so that the government of Malaysia can provide more loans to deserving qualifying civil servants to encourage home ownership. In the second transaction, a large financial institution in Malaysia was able to transfer risk from SME loans. We all know SME loans have got high risk of non-repayment default. They were able to transfer that risk over to capital market providers and have more liquidity to channel more funding to SMEs. Now, when the global financial crisis happened, the markets globally said the people who caused this were securitization experts. Now, from there, we saw the evolution that took place after that was Islamic finance. I say it is an evolution and enhancement because in Islamic finance, deals must be structured that it must be real asset based. So it must not just have cash flows, but there must be a real asset backing it. So blended finance has got great potential to fund the green space, but it can actually learn a lot from these previous innovation lessons to be learned so that it can better serve capital providers who've got funds as well as project sponsors who require those funds. So I'm going to just stop there to make that reference to previous transaction, and we'll happy to provide more observation later as we progress. Martina, over back to you.
Great, thank you. And maybe if the audience has any more questions, any specific questions on that, you can also get the chance to sort of speak to that in a bit more detail. But very kind of useful to remind everyone that really ultimately these forms of risk management aren't necessarily new, right, to the financial world, and we're not necessarily reinventing the wheel here. So moving on maybe to some of the barriers to mobilization. We spoke earlier or just now about the sort of value of blended finance in sort of de-risking projects, really crowding in more private capital. But what do you think are some of the limits? Rebecca, I'll pass this to you first.
Thanks, Martina. No, I think you alluded to some of the challenges, and I think Sharifah as well, learning from the lessons of securitization, you will see the shadows of securitization sort of showing us what possible areas blended finance could possibly have challenges in. So, of 4 main challenges I see it. First is that there is limited availability of concessional and philanthropic capital. as we see today, fiscal budget constraints are there in developed nations as you have competing demands for public finance. Governments have many different mandates, and that has resulted in an environment that has increasing competition for development funding. So the amount of funds you have for concessional funding is shrinking. So that would be a challenge for blended finance funds in the future. Second, as you can imagine, because of the different stakeholders, there is increasing complexity in structuring deals that align with diverse stakeholder interests. So this is the main proposition of blended finance. It is also difficult to match financing structures with the return prospect and needs of investees. And if complexity increases, this also increases the cost of setting up blenders finance funds. Third, for a structure with so many stakeholders and different interests, governance is key. Blended finance funds must closely monitor key elements. So this includes things like fund management selection, remuneration, investment committee composition, investment decision processes to ensure proper governance, avoid conflict of interest, and ensure close alignment with climate goals. Finally, the credibility of the implementation agency is key. Implementation agencies need to collaborate with counterparts, hold strong commitments, and scale up competency. If need be, implementation agencies should seek technical advisory from more experienced entities such as AIGCC, UNDP, and maybe even the World Bank Group to improve their blended finance success, learning from experience across the region. Yes, Martina.
Great. And I want to ask you, Yinwei, to maybe build on that or add on that, and maybe speak to some of the specific challenges or barriers that exist in Malaysia, but also in the region more broadly, and maybe add some nuance to what Rebecca just said.
Yeah, thanks, Martina, and thank you, CGM, for this opportunities to share some of our experiences here as well. So kind of building on to what Rebecca have shared, one of the key barriers that we actually see kind of running some of the blended finance or attempting to set up a blended finance in Malaysia is also definitely in terms of data disclosure and also taxonomy guides. There's currently insufficient climate and financial data that's available. For example, very limited information about emissions baseline, what are the project level information, especially at the SMEs, risk assessments or comparable metrics that SMEs could actually disclose. ESG is still quite nascent as well. Those informations are not readily available, which further undermines some of the investor confidence in investing in these projects. We spoke about at a regional level, there's the ASEAN taxonomy of sustainable finance as well, right? While it helps, but it's also not legally binding in that sense. It's also very multi-tiered. Taking that approach that's multi-tiered, it adds a lot of complexity to the whole model as well in terms of applying its criteria consistently across different countries, and the different member states would have different threshold in creating those uncertainties as well. On the other point, potentially that we need to look into is also on the policy and regulatory uncertainties that different countries have. In Malaysia, for example, the carbon tax or carbon pricing uncertainty, the tariffs incompatibility, for example, have kind of hampered some of the financing initiatives for new energy solutions. People are still not very certain on where to place those funds, and new energies are still struggling to get concessional money for feasibility studies, for example. And you can see that across different countries in the region as well, who may have fossil fuel subsidies or inconsistent tariff regimes. There's also very weak regulatory frameworks. Not all countries have permits, license, grid connection rules that are immediately clear. You have to navigate different jurisdictions in terms of land rights as well. And how do we actually then create confidence for regional and international investors in those layers, right? And also kind of building in terms of public finance and philanthropic capital, while they're traditionally the ones that would put in a concessional funding, like what Rebecca mentioned, is getting more and more limited. And when we did a recent study on the state of impact recently on philanthropic capital, most of them are still investing in social short-term kind of returns, whereas only 10% is going towards climate or nature. There needs to be a lot more awareness that comes into how climate and nature essentially also affects the social impact outcomes that we want to see. But this is not immediately reflected in a lot of those structures, a lot of those financing deals that we are speaking of. So that adds another layer of complexity to it. And maybe just to kind of also speak on the project pipelines, currently it's not a lot of investable grade or bankable projects that we are seeing. And if you talk about climate or environment, the feasibility studies is something that we need to do, right? And environment and social due diligence or legal structurings, these are not currently funded in terms of the supply of it. It's still very much underfunded. And project preparation facilities at a regional level, whether it's in the ASEAN level or Southeast Asia, they're often focused on later stage. A lot of the early seeds phases are not really funded. So that kind of pushes aside all the new technology, new energy, or even climate adaptation, where a lot of people are not willing to put in money for the long-term investment that have to wait more than 5 years, for example. So there's currently a big mismatch between what the public concessional funders are willing to provide, as well as what the project developers actually need on the ground and what we actually need in terms of getting towards the energy transition. So I would say the high perceived risk, the lack of de-risking mechanisms, these are all what constitutes and kind of contribute to the barriers in establishing blended finance, not just in Malaysia, but also across the region. For Malaysia, I suppose there's still a lot of kind of de-risking tools that needs to be made available to make it more kind of accessible for SMEs, especially to go into it. So I'll stop right there and maybe pass it back to you.
No, thank you. And hopefully we can sort of, if the audience can kind of keep a pin on these elements that were touched on, because hopefully we can kind of speak to some of those when we talk a little bit about this regional climate finance hub and how it might mitigate some of these concerns. But before we get to that, I think we touched on sort of the complexity of deals. We touched on sort of project pipelines, the limited availability of concessional capital. But one thing I think that blended finance gets a lot of criticism for sometimes is the sort of scalability. And it often is related to these other challenges that it faces, right? So Sharifa, I want to ask you, how do we sort of mitigate against this challenge of scalability? And is this even something to be concerned about when thinking about blended finance?
Okay, right. Thank you so much, Martina. So I had a friend over last night, and he's an entrepreneur, and he is here doing capital raise, and their project is actually capturing carbon, turning it into biochar, and using this in the agriculture segment, to address food security. And also they have the ability to turn some of this into carbon credits. Now, he tells me that, projects are so small, I can't actually reach to the funders that I like to reach, because this is the stage where I really need a lot of funding. But a lot of the investors that he met recently in the region are stating exactly these challenges that Yinwei had mentioned. So obviously scalability is an issue. And what are some of the other challenges? I just want to add on a little bit to what Yinwei had mentioned. Some of these project ideas are actually coming out from outside the region. But when they actually come to look for financing in this region, many of the funds already have got certain mandate. They can't invest in projects which are located outside the region, for example, right? So if there is an ability for the funds to look into projects, cross-boundary, that could be one of the ways to add more of these little projects and build on that scalability. Now, I also want to touch on a recent deal that came out in Southeast Asia, and this is the philanthropy bond issued by the second sovereign fund of Indonesia government, Danantara. So this is called the patriotic bond by the Indonesian government. Why it's called patriotic? It's because the bonds only issue 2% return. Interest rates savings in Indonesia can fetch 4.5%. So you really have to be very, very patriotic in order to be able to put money in. And they are raising a lot of these funds from the philanthropy market. Now, how am I positioning this as something that we can mitigate the scale issue? So Danantara is a sovereign. So because of the involvement of a sovereign, this patriotic bond was able to get the highest level of rating from Fitch, AAA. So institutions, sovereigns need to come together, lend their name, turn structures into something bankable with highest credit rating. So the previous transaction that I spoke about, the securitization deal, we had the privilege of getting Malaysia's National Mortgage Corporation, Chagamas, who backed these transactions. And because of the involvement of Chagamas, the bonds actually had a AAA rating. So once the structure is created, then it would be possible to then fit in smaller projects onto this platform, and the sovereign or the institution can raise funds using their credit from the philanthropy market, from the public market, private market, then which can then be channeled to the smaller projects. So I see that as a way to achieve scalability. It will take a lot of effort. It will take a lot of collaboration, but I'm hopeful that this is one way for us to mitigate towards the scalability risk.
No, thank you. I think you kind of touched on an important element, I think, of blending, which is also to be more strategic with the use of public funds. And I think you spoke to how that also can lend credibility to kind of attract more investors. And I think that's a very relevant component. So moving on, I think, to maybe some of those specific SME challenges. And I think your point, Sharifa, on the size of projects actually sets the stage quite nicely, because obviously the financing challenges tend to be particularly acute for SMEs, and they make up such a significant portion of Southeast Asia and Malaysia's economic activity. So Yinwei, I want to ask you, how do you think blended finance could be of use to them in accessing financing that they perhaps otherwise would not be able to get? And how do you think we can make this financing tool more readily available to these stakeholders?
Sure. So I think just kind of echoing what Sharifa has mentioned as well, in our recent study, we have actually interviewed about 100 SMEs that are in the climate space. And it actually shows that there's quite a heavy demand in the mid-range, right? They're typically asking for about 100,000 to 3 million, which it's either too small for grants, or they're not able to tap into those grants, or they are not able to get into the equity or the debt model, because from the background, at least from those that we surveyed, a lot of them have smaller workforce, they lack collaterals, they have low sales turnover, they don't have the proven business model that they all ask for. So it typically doesn't meet the requirements for either of those different entities. And they cite that, just like what Rebecca has mentioned, there's a lot of grants that are not readily now available for them to apply to. So they cited the fact that there's lack of funding, lack of investor interest in this area, because it's just not at the range that even FI sometimes are talking at millions. If you talk about 3 million, they're not very interested. And we see this even in the Climate Finance Innovation Lab that we are holding currently, right? But the truth is many SMEs rely heavily on grants, right? On their personal savings or on equity. It's hard for them to get that because it's not great for their cash flow, right? There's a high risk there for them. And more investors are expecting returns in 2 years. Whereas for climate tech, if you're speaking specifically about the climate financing, it takes at least 5 to 10 years for you to yield the returns that you want to see. So SMEs get stuck in this very tricky situation of being in the missing middle, right? They're too big for microfinance, or they're too small for some of the standard commercial lending that we see. So how do we kind of get this to with blended finance, right? Looking at this dynamic, I think this is where blended finance can help support in terms of de-risking those investments by using more flexible and more tailored instruments as well. You spoke about first loss tranches or partial credit agreements, or even performance guarantees that kind of help absorb risks that private investors are unwilling to take alone. There are also some innovation when it comes to revolving funds or matching grants or milestone-based disbursement that helps to kind of manage the risk exposure as a whole. And I think those are some expertise that private sectors can bring in to see how that can be structured in a more flexible manner. In terms of public or DFIs, I do see that they can play a bigger role as well through the public kind of blended finance facilities that can be set up to act as an anchor investors to signal somewhat a confidence in this space, especially for climate. and to provide more concessional capital that gives early stages or riskier SMEs to access financing that otherwise they wouldn't be able to do so. How does public, private, and the philanthropic and development institution as a whole cooperate to align their KPIs, time horizons? I think as Sharifa has mentioned, I'm positive that can be done. It's just a matter of who's going to coordinate it and how that can be coordinated in a way that is efficient or effective, right? Looking at both Malaysia state and also at the ASEAN level. FAST-P, is one that Singapore has done and has kind of showed the ability to have a blended finance vehicle. But how do we now improve some of those technical assistance facilities as well to build the pipelines within those that we are looking for, right? In terms of helping SMEs build investment grade proposals, helping them to get business modeling, their financial forecasting right, their ESG risk assessment. All this is like I mentioned before, can we have project preparation facilities that could help fill in those gaps to make sure that early stages SMEs can also benefit from that? And last but not least, looking at maybe aggregating or bundling smaller projects. How do we kind of design a warehousing or pooling mechanism to bundle up these multiple small projects into larger portfolios that can attract institutional investors? Because the more we speak to different people, it just seems that people that has the money are more interested with bigger funds, bigger investments, and they're also looking for more impact as well. So when we pull them together, we can not just diversify the risks, but also the impact narratives that is going to come out from it, right? And what kind of, whether it's social, whether it's environment, whether it's governance, I think those are the benefits of pulling it together. And I think Penjana Capital has somewhat modeled a local example of that, or aggregation, and how can we then maybe learn from that that would also support the SMEs. Cross-border blending platforms is also something that people speak about as well. Again, who should host it, who can actually mobilize that is another question that I think is worth going deeper into.
Great. And I want to sort of now flip the question and focus on the other end of the spectrum, in the sense of how can we maybe how can SMEs actually ensure that they're well positioned and prepared to be a part of this pipeline of projects? So what elements do you think they would need to start bearing in mind? And I want to ask this to you, Rebecca. So what do SMEs need to do in that sense?
Thanks, Martina. Okay, I'm assuming the audience is a broad range of SMEs. Maybe not everyone has been completely climate aligned yet. So to begin with, I think a large group of SMEs in Malaysia, we need to see the value proposition in adopting ESG practices and identifying the opportunities that are relevant for your business. So we look at things from an export competitiveness point of view, where there's potential export markets to the EU, economic resilience point of view, where you can protect your business and your operations from climate risk. And finally, the ability to access certain type of funding that are available for attractive rates. So I think Yingwei alluded to this, some of the grants or some of the funds that are available. And I think Bank Negara has some of these funds, such as the low carbon transition facility and the high tech and green facilities. So some banks, some DFIs such as SME banks, also have their own targeted programs for SMEs in the ESG space. But of course, this requires close engagement with these entities. And that leads to the next point, where SMEs need to improve their capacity building in the ESG space to understand how to develop bankable proposals and understanding ESG requirements. So there are some government agencies that come into this space. So KUSKOP and SME Corp Malaysia has been organizing outreach programs. I believe that this Thursday on the 16th of October, they have an ESG forum which talks about navigating the future of sustainability reporting. This is co-organized by the ICAEW, MICPA, and SME Corp, where it provides insights to how businesses, especially micro SMEs, can effectively incorporate the TCFD, Task Force for Climate-Related Financial Disclosures, into their sustainability practices. So some of these government initiatives can actually help SMEs scale up their operations and understanding what the financiers are looking for. And this could help them be part of the pipeline. Then, of course, as previously mentioned, engagement and partnership to the financiers themselves. There are a lot of banks that are now moving in the sustainability space because of course, pressure internationally and their own sustainability commitments. This is where SMEs can tap onto their expertise and receive helpful input on their projects as well. And finally, the participation in platforms or incubators such as CFIL that UNDP is involved in. It is a very interesting incubator where SMEs can be onboarded and receive technical expertise and support throughout, with hope for eventually getting the funding required. So that's all I have. Thanks, Martina.
No, that's great. Yes,
Sharon,
jump in.
All right, Martina, can I just comment also on something that Yinwei had mentioned just now, which is very, very important, a suggestion on the cross-border platform, right? That is actually something that a lot of these SMEs, I think, will find very useful. So the example I mentioned earlier about my friend who's the entrepreneur, all their equipment and everything are actually located in a different geography, but a lot of the funds are located somewhere else, right? And so if there is this platform that can actually allow for cross-funding, a lot more SMEs will benefit from it. And another thing that Yinwei mentioned about taxonomy, and that is going back to the issue of challenges that businesses, maybe even lenders face in that sense. So the ASEAN taxonomy is actually a really, really good step forward in defining eligibility criteria of projects, right? Now, this taxonomy is very much driven or structured based on the European taxonomy. A lot of the points or the terms in the European taxonomy may not work in our social context. The environment part is one thing, but a lot on the lines of social and governance may not necessarily be applicable here. But what I find in the market here, where a borrower goes to a lender for a green finance or blended finance for that matter, some of these institutions are actually going back to the European taxonomy. And when you ask them, they cite the reason that this is the head office's instructions to use a more global taxonomy. So I try to tell these lenders, right, you need to try to use the local taxonomy or the regional taxonomy, because the European taxonomy, that's going to be very difficult for people to understand, to adopt. So maybe there has to be a little bit more of concession among the providers of capital to use more the regional infrastructure that we have currently in place.
No, thank you for adding that. I think that's a very valuable point. And I like, Rebecca, that you also included some very, in the spirit of sort of tangible outcomes, you included some very concrete steps that SMEs can take this Thursday and also through the sort of incubator program. Before we move on to sort of the Regional Climate Finance Hub, I want to ask you something, Sharifa, on maybe the specific sectors or themes that such a tool might be useful for, because not a shameless plug, but our team also recently launched a report on place-based just transitions. And in there, we really talk about the role of blended finance and how it can sort of really support those social dimensions of climate projects that typically aren't initially revenue generating. And I think this was something that was mentioned earlier in the conversation around some elements just won't be revenue generating initially and need a bit more time. So in that regard, I do want to ask you, are there some areas, themes, or sectors where you think it might be particularly useful for blending to come into play for businesses to attract that kind of financing?
Yeah. So if you look at the traditional sectors, the securitization transactions, or even the more complex capital market instruments that funded, a lot of these things are actually in the infrastructure sector. Power plant generation, mortgage-backed that I spoke about earlier. So these are actually typical segments that will continue to benefit from blended finance. The bonds that I mentioned, the patriotic bonds that Danantara is issuing, that's actually going to go towards the renewable energy sector as well as the waste to energy sector. So these are sectors, as we move right from coal to more cleaner sources of energy, there is going to be a need for a lot more funding to be mobilized in this space. The SMEs may not be able to have project solutions that can build up to that scale, but they they can have solutions that can be ancillary to the creation of a more low carbon, green economy. So these are all sectors that I feel that blended finance can deploy capital quite effectively. Now, the other area is biodiversity. So the blue economy, the ocean is a place where, you know, a lot of our food security, ocean provides this, right? So typically, biodiversity projects, lending may not be suitable because the returns are actually way into beyond 5-year horizon. So this is another area that can benefit from blended finance. And I guess in that sense, the Asian Venture Philanthropy Network is doing some work to mobilize capital to the blue economy. So those are some of the segments, Martina, which I feel blended finance can actually effectively deploy capital.
Great, that's helpful. Thank you. So I think now that we have set some good foundations, it might be good to start exploring the potential idea of a regional climate finance hub. So Rebecca, I want to ask you, what do you think it would mean to really set up a regional climate finance hub, and what do you think the value add of something like this would be?
Particularly, I think it will be taking the learnings from local platforms such as CPhil, so that CPhil has done a great job in connecting firms and technical advisors, and this to be connected at a regional level. So what we would imagine it looks like is that it's a centralized platform to coordinate climate finance efforts across the region. So it would be like a marketplace for capital and projects, where space where governments, DFIs, and private investors come together to fund climate and nature solutions. So something like CPhil, it could host pitching platforms, risk-sharing instruments, and technical advisory services. So from a firm perspective, this provides technical support and funding required for takeoff. This could be through instruments such as debt, equity, or grants, or even through a blended finance fund. But then taking also from what Sharifah has mentioned, a blended finance fund may not suit all sectors, but it's also a good avenue for a blended finance fund to come in to explore. But from an investor's perspective, the incubator serves as a credible project pipeline for their climate and nature investment mandate. As Yinwei was talking about as well, the issue that Malaysia faces sometimes is also about the project pipeline credibility. So this is where platforms such as this can improve the credibility of the project finance pipeline. And we know that the region is so interconnected. The need for collective action does not respect national boundaries. So having a regional hub can actually collect all these experiences together. So the functions could be, as Yinwei alluded to as well, some of the challenges we do observe is the issue about pre-feasibility and feasibility studies, where there's some projects that require very specific technical, engineering, and environmental expertise. And investors are not willing to fund that aspect of the project. They would rather fund the project after it has been determined to be commercially viable. Some of the other areas that we're looking for solutions to this platform is aggregating and de-risking early stage projects. So like Yinwei and Sharifah talked about, pulling together small projects so that they achieve the scale required by investors, de-risking through guarantees and other financial instruments. So maybe a sovereign-backed or other sovereign level related entities such as Chagamas. Next, you have the regional pipeline development, as we talked about, drawing lessons from the region. We have within the region quite similar geographical and cultural profiles that can be used to learn from each other and improve the business viability of individual firms. Next would be standardizing taxonomies. So ASEAN taxonomy is a great step forward, but how does it look like on a practical basis for firms on the ground? And how does it intersect with national taxonomies? Because even in Malaysia, there are multiple taxonomies, and trying to understand how that interrelates with the ASEAN taxonomy. Understand that Bank Negara and JC3 are working on that process of the pipeline as well. So hopefully those inputs could be fed into the platform. And finally, bringing together international investors who are looking to diversify their risks from a single country portfolio. So Sharifah was alluding to the fact that some investors have issues in different geographical areas. Maybe one country risk may be too concerning. A regional portfolio could be more attractive to international investors.
Great. And I think you've provided a really great segue into the next question I want to ask, which is on sort of what investors are looking for, because they tend to look And this is something that a lot of our members also kind of call for. They look for credible, bankable investment opportunities in the region. So Sharifa, how do you think a regional climate finance hub might support this? And what do you think investors, and in particular local investors, will need to really get comfortable with what they perceive still to be high risk?
Right. So, the creation of a hub is definitely going to be beneficial, useful. Many of these, if we actually now go back to the SMEs, we spoke about sectors that require funding earlier on. Some of these sectors are big sectors, so they know how to pitch their project. But if we look at the SMEs are the ones who are going to benefit greatly from the creation of a hub that we are discussing here, right? Some of the key things that they might find very, very useful would be as basic as being given a place for them to sit down and work, like a co-working space, right? They probably will also benefit a lot from coaching and guidance on how to build their pitches. They have a lot of ideas, the concept, turning this into minimum viable products. The coaching and the guidance and mentoring is something else that a hub like this can greatly provide to them, right? Now, I want to cite the example of a very big legal firm in the UK. What they did was that they created a working space within their office in London. You know how expensive space can be in London, and the small businesses and entrepreneurs will not be able to afford rental in the city. So this legal firm created a hub. You have to go through a filtration process. Once it goes through that process, they allow you to come in and sit and work in that hub. The legal partners actually work very closely with these entrepreneurs, shaping up their ideas, giving them whatever support that they need to take so that their projects would take off. What will the legal firm earn in return? Well, it is a philanthropic effort, but more importantly, a lot of these new businesses come up with ideas that require patenting, and obviously then the legal firm will tend to benefit from it, right? So, but they do it with, no such expectations whatsoever. So a hub that we are talking about like this, if we can have service providers come in and provide that mentoring, provide that shaping effort that the SMEs need, will help these SMEs then turn their ideas into concepts that investors will be able to come in and see it as early capability and potential for turning this into bankable, scalable projects. So, I am, for one, very, very supportive of the creation of this hub. As we progress more, I will probably touch a little bit on, what are things that we probably need to create this hub so that we can make it as effective, as impactful as possible. But these are some of my ideas of how it can benefit the small players, and how small players then can get ready to put their proposals and pitches in front of investors.
No, great. Hopefully we'll get a chance to sort of build more on your ideas for operationalizing this shortly. Before I ask the next question, I just want to remind the audience to sort of please put your questions in the chat. In about 5 minutes or so, we're going to open the floor and answer any of the questions you have. I saw that there's already one. But before that, I want to give Yinwei, I want to give you an opportunity to speak a little bit more on the CIFL program and the incubator programs that Rebecca actually alluded to, and sort of maybe tell us a little bit why you think Malaysia might be well positioned to anchor such an initiative, and what some of those initiatives are that we can actually build on. And I'll have, maybe Yinwei, you can start, and then if Rebecca, there's anything you want to add on, feel free to jump in.
Yeah, sure. So Malaysia has started the Climate Finance Innovation Lab, as some of you have known. I think that's a great initiative that GC3 has initiated, which focus really on the marginally bankable SMEs in the climate space. It kind of touch on all the elements that we spoke about in terms of the barriers, which is really to support those that are currently in the space, but they're not able to do so due to the various barriers that they have. And it includes all the elements that Sharifa mentioned, right? The mentoring, the supporting them in building pipelines and bankable businesses. It's not easy. I would say that it's been a journey, but at the same time, this is a process that's necessary for us in terms of providing the right ecosystem that the SMEs can actually thrive, and also to build right pipelines that could contribute to the net zero targets that we are looking at. And why is Malaysia well positioned to anchor this initiative and beyond is also the fact that Malaysia has a large capital market. You know, we hit a record 4.2 trillion in 2024, which is up from 3.8 trillion back in 2023, driven by a lot in terms of equity, bond, and the Sukuk market as well. So when it comes to capital market, Malaysia has a very large and growing financial market. We have a strong capital base, and Islamic capital market itself is growing to a 2.6 trillion market as well. So all this, we are not short of funds, right? But it's how does this funds get channeled into those aspirations that we have when it comes to climate and environment. And SMEs is the backbone of our economy. It makes up 97% of our employment. They are generating 38% of our GDP. So if we don't actually invest in this group, there's a huge loss there that we are experiencing, right? And not to also forget to mention that the regulatory framework or policy instruments that Malaysia currently have is also very mature comparatively in the region. And I think this is where it places Malaysia at a very strategic position to even potentially host, right, this climate finance regional hub that kind of help facilitate international cross-border investments. We have the CCPT, we were the first to put out the SRI, and as Rebecca has mentioned, we are working, or Bank Negara is working with the JC3 on the Malaysian taxonomy on sustainable finance that is aligned to the ASEAN taxonomy as a whole. So I think that would make it a lot easier for local SMEs to actually go on board in applying for finances, whether it's here or across the ASEAN level as well. And the other point that I would make is that in terms of the leadership, the recent ASEAN chairmanship demonstrated that Malaysia has been able to bring countries to the table together and negotiate terms successfully from a multilateralism kind of mutual respect approach. And CIFIL itself is also something, if we could test out what worked or what didn't work, has the potential to scale it at a Southeast Asia level. So with all this growing kind of ecosystem for the climate SMEs, for intermediaries in Malaysia, and also some of the work that UNDP is doing, whether in terms of a financing hub for climate for SMEs that we have built recently, and we have launched and onboarding SMEs in the whole, and our work with the climate finance network across the region. All this will help shape the market engagement, the blended finance assessment, and also in investor mapping. You see where those funds or investors' interests are to build the right pipelines for the future as well. I'll stop there. I'll probably pass it back to you, Martina.
Great. Well, I want to leave some time for questions. So maybe I'll ask one final question that you can all kind of speak to very quickly, and then we can move to this question that we've received on guidelines and rules. But in the spirit of sort of actionable outcomes, if you could maybe all just in a sentence or so summarize one actionable next step that you would like participants to really take forward from this discussion. So maybe I'll start with you, Sharifa, and then move to you, Rebecca, and then Yingwei.
Okay, all right. So we have actually touched on a lot of, from basic to challenges. So what I hope audience will take from this discussion is that general appreciation for the need for blended finance. So that's one. For us all, when we talk about looking at a hub, I guess one actionable step, even before we look at framework, is probably maybe thinking about a roadmap that we can put in place on how to create this hub. At the very beginning of this roadmap, one of the key few milestones that we may need to look at are what are there any other agencies, institutions that are already talking about putting together this hub? Can we work together with them so that we can reduce redundancies and overlaps and work together in creating something that is effective for the development of blended finance in the hub? So those are one or two actionable steps. Martina, I will let my fellow speakers also contribute.
Okay, I think we have different call for actions for different stakeholders. So the SMEs, I think what you should do is to identify your business opportunities in sustainability, improve capacity, and align your operations with climate and sustainability standards. So you're making yourself ready for the pipeline. Investors engage in CFIL. I think we require a lot of technical expertise and ready funders. And of course, explore this engagement to potential regional initiatives. Finally, for the policymakers, explore these ideas with different stakeholders. And I think some of the steps that we're taking forward has already been in this nature. For example, what JC3 is doing. Taxonomy.
Maybe jumping in, one actionable step that I think participants could take, whether you are SMEs or your FI, is really looking into how you could channel practical, bankable, or even marginally bankable projects to the Climate Finance Innovation Lab currently. Have a look at what is there, what's currently there in terms of FIs, how could you contribute to that? And also in terms, if you're aspiring SMEs, do apply, get yourself onboarded into that for us to provide you with the right technical expertise. There's also a My Climate Fin Hub that UNDP has established. There are some kind of questions or surveys. There's a lot of learning materials there as well. I would encourage SMEs to also onboard themselves. It's a more longer term beyond CFIL to see how we could convene different experts, mentors in that space to build the pipelines and also to help them access financing across the board. And recently, we just had a Climate Action for Resilience Asia technical assistance funding that has been provided by the UK FCDO. So any of you who are in the climate adaptation space, we would also like to hear from you. FIs, we would definitely want to work together with the technical assistance provided in structuring financial structures or instruments that would help in this space. So just some very practical actions that I hope the participants could look forward to.
Great, thank you. And in the remaining time we have, I guess maybe we can kind of collectively address some of the questions that we've received. So one of them is around rules and guidelines set by the government to use CSRs for environmental projects or prevent the misuse of CSRs by implementation agencies. So are there any sort of rules in that sense that maybe participants should be aware of? The second question we've received is on how ASEAN governments can collectively align policy frameworks to attract and manage blended finance projects more efficiently across borders. Are there some examples of maybe good best practices? So maybe on that, maybe just examples from ASEAN that might speak to blended finance best practices. And then the third question we've received is what some of the challenges might be to actually establishing a regional climate finance hub. So the three questions: one, any rules and guidelines on CSR use at the government level? Two, any best practices from the ASEAN level and what ASEAN governments can do? And three, some of the challenges in operationalizing the climate finance hub in Malaysia. So I think I'll kind of keep it open and have either of you three sort of address whichever question you kind of feel most apt to respond to.
Martina, can I take the CSR question? Martina,
Sure.
that's my heart, right? So actually, if we look at Malaysia's regulation on sustainability reporting, prior to sustainability reporting guidelines, the guidelines that were administered on listed entities were actually the CSR guideline by Bursa. So there was clearly a guideline on how to report on CSR activities and what impact CSR activities can create. Of course, it's not mandatory, right, to prove, but the guideline was already there. And then when we look at the sustainability framework, this was then taken into and turned into the sustainability reporting guidelines. There is then the need to attach impact to activities done. The GRI, which is actually the backbone of the sustainability requirement, also emphasizes the need to do materiality assessment and then look at the impact created. So these are all not mandatory, but these are all very, very precious guidelines set by the regulators on how companies can report on CSR activities that they undertake, such that it doesn't just lead to greenwashing claims or it is not money that is not well spent. All right. Of course, because it's not mandatory, companies then will have to rely back on their own internal governance, their own internal framework that they may comply to, like ISO standards, to ensure that whatever that they report actually is of substance, and it cannot be seen as an overclaim or be seen even as greenwashing. So guidelines are there. The discipline has to be actually enforced by the companies who are reporting. I'm going to let my other fellow speakers take that question or the other questions. I like that question on the framework in ASEAN, but let me get my other panelists to contribute. If there's time, I will provide my 2 cents on that.
Maybe I'll speak on the what ASEAN can do, right, in terms of the platform, and what would be the challenges if Malaysia were to host that regional platform. I think sustainable finance to continue that platform would be one. We definitely need to look for foundations, philanthropic, and also a consensus from the different governments to actually put in the finances to sustain this hub if this is being developed, because it does take a lot of resources when it comes to mentoring, guiding, coaching those SMEs from the ground, and also facilitating those transactions, right? The cost itself is not low. And how do we actually decide which hosting entities as well? Even in Malaysia, who will be hosting that? What kind of governance needs to be in place so that in terms of transparency, in terms of aligning capital needs where different countries have different priorities, to make sure that it is seen as something that is fair and conducted and coordinated in a way that meets the different targets or KPIs that the countries have. So I would think that it might be one of the key challenges, and I suppose with more kind of negotiations and looking at roles from an emerging and developing countries perspective, and also from the UMIC upper middle income countries, balancing those different types of priorities would be definitely the first step for us to establish what ultimately do we want to achieve from this regional hub, right? And who would be the target sectors or even the audience or the types of SMEs that we are aiming for. I would potentially recommend that we start small or like in a more targeted manner before we try to do everything, and try to kind of help everyone in the ecosystem. So that's my 2 cents. I think Rebecca would be in a better place to speak on some best practices on blended finance.
Oh, I think a lot of what Yingwei has said is definitely resonates. So from a regional perspective, there is the issue of resources, but also time, right? Because sometimes when we have investors coming to Malaysia, they want to invest today. But you look at there's a lot that needs to be set up before we can even get to the point where the projects, or let's say the entire pool is ready for investment. So that is the thing about aligning as well the time horizon, and that's why Sharifa's idea of a roadmap is going to be quite an interesting step forward in that direction. Best practices, I think Malaysia has moved forward definitely, as the ASEAN taxonomy is one of them, because when you decide to then say that I'm looking at my national taxonomy and I'm aligning to something regional, it means also sacrificing your own national interest and deciding on some middle ground with the regional interest. So that's where there are positive steps, but you can anticipate for all countries to then agree to do the same thing can be quite challenging. And just to reflect very briefly about the CSR question as well, I agree with Sharifa. The standards are actually, the guidelines are actually there. They're not enforceable. But what happens in this is that firms have very different practices. And sometimes we have issues in looking at the disclosures, because some firms can choose to disclose very differently, and that makes comparability as well quite difficult for us from an independence perspective. But what we can say is that Sharifa already alluded to it, and this is something that we have to be very careful when setting up a regional hub like this, or even a blended finance hub, is to consider the governance beforehand. And once you have the governance and the incentives in line, that's where everything else will follow.
Great. No, thank you so much, everyone. And maybe just to sort of summarize today's session, unfortunately, that's all the time we have. Although I think we said from the get-go that there was a lot to cover, and we weren't sure if we'd cover everything in an hour. But we did hear some very useful analogies from sort of a family level to securitization on how blending is really just about sort of managing risks and trying to use public capital a bit more strategically. We also discussed the challenges around blended finance, from sort of deal complexity, data availability, policy mismatches, the pipeline of projects, and just the lack of concessional capital at the moment. We spoke about SME challenges, so the missing middle issue, mismatched return expectations, and how maybe blended finance and a regional fund can actually offer a bit more of a tailored solution to bundle up projects and attract institutional investors. Finally, we spoke about a regional climate finance hub and how this can really serve as a marketplace for local and regional SMEs and investors. But obviously, there's a lot that we still need to talk through and work through on that front when it comes to operationalizing, which unfortunately we didn't get as much of a chance to talk through in detail. So hopefully that's kind of call for a next conversation. We also heard some very helpful next steps, actionable next steps around maybe developing a roadmap for such a hub, really having SMEs identify business opportunities and sustainability. Importantly, engaging with CIFL and some of the existing infrastructure that we have, whether you're an SME or an investor. Yinwei also mentioned the My Climate Fin Hub. So those resources are there and engaging with those. And at the policy level, really working across stakeholders and working with each other to kind of action some of these things. So I just want to thank the audience for joining. I'm so sorry we went 5 minutes over, but hopefully it was still very, it was 5 minutes worthwhile. But importantly, also thank my 3 panelists for contributing and for such useful insights, and for CGM for organizing this event. So just a reminder on the Zoom survey to just give your feedback. It should be popping up. And stay tuned for more sessions happening for the rest of the month. I think there's one more today. And yes, thank you all so much for joining. Hopefully this serves as the starting point for many more conversations and efforts to kind of action some of these things. Thank you.
Thank you.
Thank you, everyone.
Thank you very much.